Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, May 13th, 2024. It's 12:23 p.m. Eastern Time. So I'm starting the video. It'll be a brief one. Just wanted to mention I'm going to be away from my desk all week. I didn't realize that last week, or I would have given you a heads up. I didn't even know. My wife reminded me this weekend. We've got she's got something out in Boca Raton. We'll be there all week in a resort. It's some work-related function for her, kind of a vacation thing really, and I've done these before, and they will pretty much keep me busy, dinner, lunch, and breakfast, and excursions and other stuff throughout the week. So I won't be able to really give you many updates. I will bring my laptop if something major happens. I'm going to talk on that, what may happen this week. We have a very heavy economic calendar, but what I'm going to do real quick is just go over the main things that I've been covering lately. There's really not much of a change in anything since my last updates last week. So if you want to catch up, just go back, watch any of the recent videos or look at any of the recent posts. I'm going to walk through the stuff that, that I've been highlighting lately, what I'm, trading and positioned in, and the usual stuff, the main asset classes, stocks. QQQ, again, today we're ever so slightly up. We're up a quarter point, so pretty much a flat day. And again, we're riding on that trend line. We're in close proximity. The day is not over. So we've just seen really this grind sideways. And last week was very light on the economic calendar. This week is very heavy. And so I can all but guarantee you this market volatility is going to pick up. We're either going to get rejected here at the trend line, or we're going to break above it and then open the door to new highs, quite likely this week based on what's on the economic calendar. And then next week, remember we had peak earnings was a couple weeks ago with all the formerly known as Magnificent Seven stocks reporting, except NVIDIA, and they report next Wednesday. For some reason, they're just kind of outside that cluster of earnings that most of big tech reports on. And so that is obviously a potential market mover, NVIDIA being the third largest component of the Nasdaq 100. So that's what we're looking at. I'll be back before then, of course, and I'll try to get some updates out to you this weekend. If I don't get anything out sooner this week, if anything major happens, I'll make a point to kind of get an update out to you on the laptop. But let me just kind of review it. There it is, QQQ at the trend line, no change there. And here's the economic calendar. Let me zoom in for you here. Like I said, it's pretty thick. We've got let me change my color here. You've got PPI tomorrow morning, 8:30 a.m. That's Producer Price Index. So producer prices are going up, if or down. Inflation, ultimately will go up or down. Of course, that takes some time it doesn't immediately always trickle over. But again, market will watch it. Powell is going to flap his jaw tomorrow at 10 a.m. Then the big one, CPI, retail sales, also potential needle mover. And, some of these can even move things there. Housing starts and permits, jobless claims. We've seen that ticking up steadily. I've made mention before. That is typically the last pillar of the economy to go, or jobs. And then a recession will typically follow. So market will be watching that closely. Philly Fed, industrial production. So like I said, a very thick calendar. And then next Wednesday, NVIDIA, after the market closes, scheduled looks about 4:20 p.m. Eastern time. So let's see how we get through this week. I'm still trading, like I said, and been highlighting diversified different asset classes. Wheat being the kind of the core, the biggest ag commodity position I have, and one of my favorites still. And like I said last week, we took out that. Been waiting forever and a day for that 6-ish resistance level to go. So that opened the doors. I said it would for T2. Boom, T2 hit this morning and then some. And as I mentioned also, I believe last week, again, that's why I referenced last week's videos. I go into more detail. I didn't expect much of a reaction here. I think this is a pretty powerful breakout. Again, this is a 60-minute chart, just showing it to you, zoomed out a little bit. But we've had multiple tags of this level here, that T1 level. And it's a pretty powerful breakout. So so far, they're just burning through these divergences. If and when these divergences are taken out, meaning we take out all these previous highs right here, then it will probably just continue on up. And I think we will. Like I said, it looks good. And then, as I said, I like to spread it around. I also have some, I've had trade ideas out as well as personal positions in corn. T1 hit last week, pull back to the 2022 support. We're offered an objective entry as highlighted. And then, boom, we powered through and we've taken out that previous reaction high. That opens the door to the next targets here. And then the other one is soybeans. And like I said, birds of a feather. These three tend to move together, and you can see soybeans after hitting T1 with the typical reaction, meaning, pull back off T1, starting to power up, but it's yet to take out that previous high. If and when it does, that should open the door to T2, especially if wheat and corn are still moving up or holding up at that time. Sometimes one will consolidate, wait for the other. And then again, with inflation being everything, especially that big CPI this week, I know I've been hearing about it and reading about it. I know the market is highly anticipated. Everybody's hanging on every word the Fed says, and more importantly, what these economic reports come out with. So I'm going to go into my real-time inflation indicator in just 1 second. But and the energies, I'm still really liking natural gas. Continues to look good. We had the breakout. We were buying it here off long-term support. T1 was hit there. T hit again. T2 was hit, pulled back. Still have divergence, but remember, we're coming off a much bigger positive divergent low. And so sometimes these little small divergences just get kind of steamrolled once you have a powerful breakout like that. And so again, these are your next targets here. I'll say this, if it looks like we're going to punch through by the end of the week, again, I'll do my best if I have some time, back in the hotel room to, update the charts or get anything out to you. I'll let you know. But I've made the case before that, and natural gas is on the site. It's marked also as a long-term trade idea. Those are trades, typical trend trades or investment trades that are expected to last longer than a typical swing trade. A typical swing trade, although sometimes the swing trades on the site, the targets are hitting even a single day or just a few days. That's not unusual, especially the first or initial targets. But typically I measure a swing trade, the holding period's measured in weeks to months, a couple weeks to a few months. And then a trend trade or longer term trend trade or longer term swing trade, that's usually, 6 months or more. And I think this has the potential for that. Either way, I just wanted to share it's constructive. Now, remember, don't fall in love with natural gas. She'll burn you every time. This one has a little wedge here on the 60-minute chart to keep things quick. I'm trying to get this video out to you. I had some problems. I was scrambling to get out of town today. Should already be on the road. Have some big projects going on here on the house, construction projects. I had to take care of some things on that. And then, of course, the website, if you noticed earlier, was down today. Had to do with a SSL certificate, and there's actually 2 of those for the site. And so I was on the phone with my web hosting company earlier today for quite a while getting that fixed. So everything should be working now. I'll check the site throughout the week, make sure it's up and running. And I just wanted to say that this will be the last video for today right here, unless something crazy were to happen, by the close today. So there's that little wedge, and kind of like wheat, I think that any pullbacks will most likely be contained. But where and when, you have, I'll be honest, guys, and I don't have it queued up, the chart of natural gas futures. Set your stops where, depending on your entry and where your targets are. But I just wanted to kind of share my thoughts that for the time being, even with these divergences, I view pullbacks as a buying opportunity, pullbacks into support ideally. And again, you can reference the last natural gas futures chart I would have covered last week, probably on Friday, to see what those levels are. So still looking good. And as is crude, told you we started buying crude last week. You know what, I can pull that chart up. Here, there's natural gas futures. You're buying it off this 1925 level. T1 hit, T2 hit, T3 hit, just marching up, stair-stepping up. Does have divergence. Does have an uptrend line, a similar wedge as to what I just showed you on UNG, the ETN. Maybe we wedge up, hit T4, and that reaction could take us down below there. My thoughts are, again, my thoughts are, even if that happens, again, depending on where you're at, if you're micromanaging the trade, some people may just be positioned in this, wanting to ride out the pullbacks. That's fine. Active traders might want to game pullbacks. And so when you start to get these divergences, even coming off the big divergent low, that's when the odds are pretty decent. But last time, look, we had divergence at this high when T3 was hit. And we did. We got a pullback. And guys, this is what I'm talking about. This is a perfect example. You could have booked profits at T3. That was 232. And then re-entered right back. You can see exactly, came right there to the button, right down to that T2, which is 2207, and then bounced. And so that's active trading. You don't always get those pullbacks. Sometimes you can power on through, but you are coming up. I want to mention we're coming up on some pretty decent resistance. You have this major reaction low here, some consolidation in there, reaction high. So that it wouldn't be a bad idea to either, as an active trader, book profits. You could even reverse there with a stop above, or wait for a break of that trend line, gain maybe a little bit deeper pullback. If we do, I'll say the same level I told you last week, 214 right here. This was a nice basing pattern, and that would also be roughly in line with the measured target of the wedge right there if we broke down. But you may not get that if there's a lot of buyers waiting to get in natural gas, like I suspect there might be. Crude, same thing, playing this one like a grand piano. Bought from here, 78 down to the trend line with a preferred buy point of the trend line. And we got it there, that divergent low, rallied up, hit the 79-ish target, then the 79.81 target on Friday, pulled back right to that 78-ish support or breakout point there of that. Was also price support, and moving on up. And remember, we're coming off this divergent low. That was a wedge breakout. So I still favor crude up to at least this downtrend line right here. I tried to hit it with circles. Now, if that happens, let's talk about inflation. I like to play a little game, just like I like to play the earnings game. I like to play this guess where inflation's going to come in game. Been doing this for, over a year now. And I use DJP. It's a broad-based commodity ETN, tracks a UBS commodity index. So it's a real-time inflation gauge. It's not exactly what the CPI is, far from it, because you have actual commodity prices. But remember, crude oil is the biggest component of broad-based commodity indexes. Have energy as their biggest component, primarily crude, and then natural gas and other things. And that is the one that has the biggest impact on inflation. And it's the one that's measured most instantaneously, or as instantaneous as possible. I'm talking about the monthly CPI report, because if crude shoots up 10-15%, believe you me, the gas stations are very quick to raise the price. Likewise, when it falls, of course, they're a little slower to go out there and change their pricing, but you get the point. A surge in crude prices are almost immediately impacted on your pocket with prices going up on fuel. And the rest of it, of course, you have in here, you have industrial metals, precious metals, all that other good stuff, and the agricultural commodities we're trading. But there's more of a lag there, as I said. That's not in the CPI. What's in the CPI is a loaf of bread, not the price of grain or wheat. But ultimately, those things do carry through. Wheat can only go up so much before the producers pass along that cost. So with that being said, and this has been pretty accurate lately. I do these little arrows. We're waiting on the April CPI coming out, Wednesday. This little box here, there's April 1st right there. I think you can see, I'll zoom in real close so you can see it in the video, put my crosshairs on it. That's the 1st of April. So this is what commodities did in the month of April. They started right here. They close, really they're going to measure because that's the closing candle in the end of March. There's your April 1st candle. And so you can just eyeball it and say, okay, this is probably the average. They surged up early on in the month, stayed right here in this range, and this was the last day of the month. Not this one down here, it was this one. So that's somewhere in there is the average. And I'll take this and we'll just measure like this, measure up. So that's about a 3.3% increase. And again, you're not going to see a 3.3% increase month over month on the CPI because although crude will tick into that, and then they're going to give you the core core inflation rate as well, and then excluding volatile food and energy. But you can see, and it's again, over the years, I don't think we've missed yet when there's a big surge, when you're, or drop, a big drop. And it's almost always, for some reason, maybe this one day won't work. And I wouldn't bet the farm on it, by the way, guys. But my point is, when there's a pretty noticeable uptick and you look at where the consensus is, if it's not reflected, or a pretty noticeable downtick, then usually CPI is either going to miss or beat the expectations, the expected number, which, by the way, let me go look at that. Go back to that economic calendar. I don't even know what consensus is. Unfortunately, probably won't be around in front of my computer when it happens. Consensus is for a 0.3% increase month over month and a 3.4% increase year over year. So let's go back to that. So 3.3 and 3. We already know that, that's a pretty big uptick. Again, a lot of this won't be reflected in real time. There's quite a bit of lag. But again, crude does have a pretty big impact. And then what was it, 3.4 year over year? So if we take the average point, I'm just going to grab here, and we go back to April last year, well, that number might come in better. Again, there's other things in there that aren't in here, such as the big one, owner equivalent rent. That's I believe the biggest component of CPI, if I'm not mistaken, with energy right behind it. But so that puts us, this box right here is the April box. So, and again, the most important thing is the market's reaction to what comes out, not whether they come in below or above expectations. I just wanted to mention, based on this, inflation, and again, this is what I think, what they should be looking at, money managers and the likes, is this reacceleration in inflation. Could it be just a short-lived thing with another leg? Absolutely. But you can see here, commodities, inflation has been sticky. It was going down. This was the reason for the rally that we saw off the October 2022 lows right here, this abatement inflation. But you can see it's refusing to go down anymore. And we're in this trading range. I keep circling here. And we're at the upper end of that range. And we're coming off the near-term momentum. Last 2 months, you can see a very consistent and persistent uptick in inflationary forces, based on, again, commodities. So we'll see what happens, and then we'll see what the market does. Like I said, if it, from a technical perspective, QQQ, if it can go up much more, it's probably it will take out the trend line. And if that happens, barring any whipsaws, and again, there's plenty on the calendar to give you whipsaws in either direction this week. I wish I could tell you otherwise, but again, that's what I would expect. So you guys, what I've done, and again, in the previous videos, I've listed the key levels and developments to watch for. And all you can do is, if you're bullish, look to buy pullbacks to support or breakouts above resistance on any security, whether it's the stock market or commodities. And if you're bearish, likewise, what you want to do is short rallies into resistance and or short a breakdown of support, right? It's just like being bullish in reverse. So let me make sure that's everything. The other thing, Treasury bonds. And here's ZN, the 10-year. This is that 6-month 2-hour chart I've been. So see, there's really no change in anything I got out to you last week. We have QQQ with the downtrend line still, flirting with that. Yet to close above it on a solid daily basis, a solid daily closing basis. And then you have ZN, the 10-year Treasury bonds, put in that little divergent high recently. Then it broke this little trend line here, this uptrend line, after rallying into the primary downtrend line there, at least on this 2-hour candlestick chart. And it's been moving sideways in this little range right here. There's a little box. It's very simple. Breakout, that should be net bullish for the stock market, because that means the 10-year bond's going up, means yields are falling. That's what will most likely happen if inflation numbers come in cooler than expected. And likewise, if they come in hotter than expected, you would most likely see this go down with rates going up. All right, guys, I'm going to wrap it up here, and I'm sorry if there's any questions on the site. I've been in and out all day, spent quite a bit of time getting the site up and running today with the tech support folks at the web hosting company, so that's working right now. Let me wrap it up here, get the video out, And again, if we get any major fireworks, I'll do my best to give you a midweek update or a couple updates. Otherwise, this week, like I said, I'll be on vacation, and I'll certainly be picking it up when I get back in town, depending on what I've got out to you in the week. I'll get something out to you over the weekend. This has been Randy Finney with Right Side of the Chart. Have a great day.